All right, and welcome back for another episode of This Week in Charts via Carnivore Trades in Wall Street from Main Street. If you're not done so already, give the video a thumbs up, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivoretrades.com for swing trading alerts and analysis. All right, so another week down. Continuation really from the gap last Friday. So we had that CPI print 2 Thursdays ago. And somebody front ran that. Obviously, it was leaked to someone, and they, pushed us down. Then we gapped lower, and all of a sudden, we went from a 50 basis point hike being priced into 75. So that looks, very shady stuff going on, but that's kind of par for the course here. And then we got a little bit of a pause in the FOMC, some short covering, and then essentially a gap down Thursday and a kind of a pause Friday. Just a doji close there to finish out OPEX week. So the downside objectives here that we've been talking about are pretty close. I know I been giving you guys these levels here on the spiders. 360, 355. I don't see us really getting through 357, 355, somewhere in that area in the near term. And I said that possibly after the FOMC, if we got a little bit of a bid and we rolled over, the market would likely bottom out by the following week. So I think that we do probably bottom sometime next week for some type of a summer rally. Now, by summer rally, I mean maybe like, into August. And I'm not talking about, we're going to rip back to 450, 460 on the SPY. I'm talking about, a decent relief rally. That's what we're really looking for here. Nothing crazy. As you can see, we're very close to that 200-week moving average. You've got this gap here at about 350. So if it did get through there, you've got a really good amount of support. And if we take a look at the spiders here, just do a simple fib. That 200-week moving average coincides perfectly with a 50% fib retrace. So there's a lot of support in here. We're oversold already. Maybe it takes a catalyst. Maybe there's some news that comes out over the weekend or possibly next week. Remember, we do have a shortened trading week this week for the holiday, so we will not be open Monday. Markets will open on Tuesday. There's also the summer solstice that happens next week, and a lot of times solstice and the equinox can kind of mark a turning point for the markets. So that's something to pay attention to as well. That occurs on Tuesday. So pay attention to that. If we look at the triple Qs here on the weekly, you're kind of just hugging this down-sloping trend line, which is diverging lower with lower lows. And then again, you're right into that, basically right into that 50 or 200-week moving average, excuse me. And then you have this pivot low here, which is a major pivot coinciding with previous all-time highs there, going back to 2020. And essentially, again, like I said, if we do have a little bit of a flush out, which I think is likely, we probably bottom for some type of a significant summer rally where things kind of quiet down. We're not looking for anything, we're not looking for crazy, there'll probably be a good rip your face off rally at some point, but we're not looking for, major, we're not going to retrace back up to the highs here. Or when we say summer rally, we're looking for just a good counter trend rally. Maybe we can take out this pivot, this one right here, but we're not looking for anything crazy here. But markets are oversold. And we're getting into some really key technical levels here. So we'll see what we get next week. It wouldn't rule out any more downside. There's always that possibility. But from what I'm seeing in the charts, it does look like we are coming into some major support again. And another thing with the Russell 2000 here, we did pierce through this trend line, but there's still, a week and a half left in the month. And if we bottom out next week, there's nothing to say we can't pop back up above that. You also have some key technical levels getting hit here this week. Draw this in here on the weekly. So you filled a major weekly gap. This was the Pfizer gap. So you guys remember that? We filled that on the weekly time frame. And then if we look on the daily, there's actually there's another gap just a little bit lower. So if we were to, there we go. So right there. So there is another gap just a little bit lower. If we were to inch down a little bit again next week and fill some of those other downside targets on the spiders and the triple Qs, you could have some support right in that area as well on the Russell. But again, coming into some key levels, and it just seems set up here for me cyclically that we'll probably get some type of a pivot in the month of July. At least that is the way that I see it, the way it's setting up for me right now. If you look at the semis here, you can see we also, basically went into a 50% fib Actually, we did go into 50% fib last week. We went into this little pivot right here. So again, maybe a little bit more downsides in the cards. You got this pivot high here. I don't think we get down to the 618. If we did, that would be, I think, a no-brainer long opportunity here, at least for a good rally. But overall, we're coming into some serious levels here. Dow Transport, same thing, 50% fib. Look at this nice consolidation base right here. And of course, the 200-week moving average right in that vicinity as well. So again, lots of key areas, key sectors that we must pay attention to are coming into some serious levels. And again, nothing to say we can't flush out a little bit in order to get there and maybe get some of those, the weak hands to finally capitulate, at least in the near term. But again, looks like we're coming into some pretty important levels, if you ask me, and we have to respect that. Anyways, let's move on here to interest rates. So 10-year Treasury yield got up to high of the week was 3.483, so a huge move here, and then it backed off a little bit. So now we're kind of getting the markets worried. The market is a little worried about recession, and that is, some investors are at least looking at bonds and saying, okay, well, if we have a recession, given the massive losses that bonds have taken over the last 2 years or so, they're kind of getting attractive at these levels. I thought we would get up to this 3.6 area, 3.66, right in that range. It did stall out a little bit, so you got up into the the 3.4, 3.5 area. Doesn't mean it can't go up there a little bit. You pierced through this this double top as well. But again, maybe rates a little top heavy, due for a correction. Nothing, to say that they can't go a little bit higher. But again, still pretty overbought in my book. And if you also look at the 30-year here as well, we went into that 200-month moving average. We've been talking about that level for a while. We've been watching it. We pierced it, and then we hit this double top. I had this trend line drawn in earlier this week, or maybe it was last week. But I said generally I don't think the 30-year is going to get too much through this. The 10-year may have a little bit more upside, but you got this double top, and then you got this big sell-off bar right above that. So generally that's going to be tough to get through, at least on the first try. That's why I think that yields probably have to do some more backing and filling. They're really overbought, and I understand why. But again, nothing goes up in a straight line forever, so just be aware of that. You could also make a case on the 10-year here. You almost have kind of a broadening pattern now. So take a look here. Basically, you went right into this trend line, so you got a broadening pattern potentially on bonds. So take a look at that. So that could be something to keep an eye on. And if we were to go down here, that would suggest negative interest rates, by the way, just so everybody's aware. If we were to go all the way back down here, we would be negative interest rates. So not saying that happens anytime soon, or if it does happen, but that is something to consider and something we'll look at way down the road, I'm sure. Anyways, let's flip over to financials here. So XLF, let's take a quick peek at that. So again, the weekly 200 moving average right in this area. And then again, just all these charts are trading just pretty much the same. And when you see all these things across all these sectors, I have to believe there's something to it. But again, weekly 200 MA, 50% fib from the March 2020 lows, right in this area, just sub 30. So this would be a good, good area for a good bounce, and again, these are major levels, these aren't minor levels that I'm talking about here. So if we do flush out a little bit, maybe next week, I think there's a good chance we can bottom or some type of a summer rally. But financials, again, getting hit just like everything else, but coming into some pretty key levels here in the near term. Anyways, moving on to energy, so big story of the week. Let's look at the daily of crude. So it did fade off the highs a little bit. I said 125 was going to be stiff resistance. We didn't quite get there. We got all the way up to 124 and change. 123.68 was the high. So not quite to 124. And then we pulled back really into Friday, Tuesday, Wednesday, Thursday, Friday, all red. Closing pretty much right on that 50-day moving average. So we basically held that by the end of the week. It does look like it wants to come down to this blue trend line, which basically coincides with that 100 moving average. If we flip onto the weekly, though, you held the 20-week moving average. So that's the important level to me. It was a pretty sharp sell-off here, but you did hold trend, so you're above all 4 major moving averages. It still looks like it wants to come test this area, though. If we break through that, we will get that correction to 90, 85 bucks. That's what I'm thinking is going to happen here. If we break through that trend line. If that holds, then there's nothing to say it can't continue. Now, I want to be clear, there's still higher price floors in energy, but nothing is impervious to a correction, as I've been saying to you guys for months now. And in fact, if we flip over to the XLE, I told you guys that I believe it was last week or the week before that XLE would top out in June. And we put in a major topping reversal candle here, and then a huge sell-off this past week. We went from 93 all the way to 73 in under 2 weeks here on the XLE. And this is why I keep telling you guys, don't chase energy up here. Wait for a correction, wait for a pullback. And that goes for everything, anything under the sun, whether that's crypto, whether that's energy, whether that's stock, anything, any asset. Never chase it higher, because you will get a chance to buy before you know it. And we had a nice pullback here on XLE, coming back down. Good support here. I think this wants to go to 65. If we look at the monthly, we still have a week and a half left, but you have a monthly engulfing reversal currently. Doesn't mean we can't get a little bit of a bounce here going into the end of the month, but as it sits currently, I think it wants to backtest 65, which would bring you back to that 200-month moving average and 100-week moving average, or excuse me, 100-month moving average. And then on the weekly, you've got that 50-week moving average upsloping just under that 65 handle. So if we were to come down with a little bit more velocity, that's where I would be looking for it to go. That would be a good area to pick it up for a really good bounce. Now, I don't know if that's a long-term low or not, but that would be a good area for a good bounce. And, again, just to show you guys, you look at the OIH, oil services. This has erased the entire invasion move up just in the last week and a half. So again, when I tell you guys don't chase energy, it doesn't mean I'm an energy bear. It doesn't mean that I think energy is going to zero. It doesn't mean I'm thinking that crude is going to go negative again. It just means that you never chase parabolic assets. And that's just the way it works. Unless you want to be a bag holder, and unless you want to butcher your dollar cost average, wait for the correction. That's what the pros do, and that's what I'm here to help you guys out with. Anyways, nat gas also coming back in. I guess the LNG facility in Texas is going to stay offline for a little bit longer, so that's going to bring nat gas prices in the short term. So we tried to hold this trend line. I think it wants to go to 650 though, so that will bring you back to this previous high and that 100-day moving average. If you get through that, there's good support with this trend line here at $6 and just below that at 550. So those are your support levels there for nat gas if it doesn't hold. But overall, energy came under pressure this week pretty much across the board, is what it is. But those are the levels I'm watching on the downside. CCJ here, so if we flip over to uranium, basically right into this trend line here. So again, we probably get a bounce off of this. It's hard to say, there's a lot of things coming into support energy-wise. I would think this gives you a bounce. If the rest of the market, though, does flush out to those support levels that I was saying, the 50% fib and the that 200-week moving average, it could take everything down a little bit, so we could pierce it. But I'd say this is a good bounce level if we get through that, though. About $19 is where I would be looking to buy this, and I believe 16. Yeah, 16 is the other level that I had this pegged at. If this trend line were to break on CCJ, but that $28 level, guys, I told you it was going to be good resistance, and we got up there, and it certainly was. We got an $8 pullback from that level there, and the URNM as well. Wouldn't really worry about this trend line too much, but if we do get lower, I've got support at about 49 or $50 there on the URNM if that does continue lower. For the potash names, nothing's really changed. I know this everybody's going to be looking at this daily 200 moving average. I like 45 to 47 a lot better as far as a bounce level. Same thing with Intrepid, about $47. That's where I want to own this. Don't worry about that daily 200 moving average. It's really kind of minor support at this point. I would look for about 45 to 47 on IPI. All right, flipping over to the dollar index here. So dollar remains strong. We pulled back pretty sharply. We just pierced through that double top, pulled back sharply, and we got a good bounce on Friday. So it's holding up really well. I still think it probably goes into corrective mode here. But if it doesn't, I would give it the upside bias, honestly, all the way to 108.50. So that, I know that's a big move. It's a long ways away, but that's just where I've got it going. If it doesn't do the, if it doesn't continue backing and filling here, or if it does break through this 104 area and we lose this pivot, we're going to about 99.50, maybe $100 on the dollar index. So that's where I have that going. As far as the yen, I know I want to cover this really quickly because the yen is basically in free fall. And if we zoom out, let's look at a monthly. I actually have this going as high as 150. So that would basically bring you up to the 1998 highs, and maybe it gets just a little bit through that, but then that's probably where it's going to top out. Now, I don't typically look at the yearly chart that often, but I want to show this to you. Look at this beautiful inside bar bull flag you got on the yearly. So we had this long consolidation, and then a breakdown, and then that ended up being the low in 2011. You just pierced that double bottom, and then ended up being the low, and you came up, then boom. Nice, beautiful inside bar pullback, and then a pop. I think this gets up to about 150, honestly. So the yen having lots of problems right now, needless to say. And there's your case for the dollar going to 108.50. So if the yen really gets slaughtered versus the dollar, obviously that's going to put upward pressure on the dollar. And that's really where I have it going. That's kind of the max move. But yen in a lot of trouble right here, as is the JGBs. So Japan, you know, they're coming to a day of reckoning here. We were talking about it many years ago, pretty much a decade ago, during the European debt crisis, and said, hey, what about Japan too? You know, eventually they're going to have some problems to deal with, and we're getting to that point now. But those are the levels there that I've got for the yen and the dollar index. Anyways, flipping over to metals. So gold's been a little volatile lately. So we had that great close on Friday. I said, this looks good, you know, good for a move up to 1920. And then Monday we had this big reversal. And then the FOMC gave it a lift, and then we kind of pulled back on Friday. A lot of this may be OPEX stuff. It probably is OPEX stuff, honestly. We basically closed right on that that daily 200 moving average, so it's pretty neutral right now. But again, gold performing really well against stocks, against crypto, and we'll get to crypto in a minute, don't worry. Bitcoin moving as I'm doing this video at about 3:30 in the afternoon right now on Saturday. But it's performing well. You've got this nice higher low potentially, so maybe it can still get up to 1920. But again, gold's doing its job as an uncertainty hedge, as a a store of value, really. And that's really the bottom line right now. Doesn't mean it can't end up going lower at some point, but right now it's outperforming most assets, really, except for the dollar index. And again, if the dollar index does have a pullback, that probably will be good for gold and will help the case up to that 1925 area in the near term. Anyways, silver here, again, a little bit on the weaker side compared to gold. Big sell-off here. A lot of this may have to do with kind of recession talk and whatnot. That's the way that the street looks at it, and that's really what it comes down to. So I'm not saying it, the Wall Street's saying it. But here you go. So here's your higher low. If you do take out this pivot, I give it the upside to 23, 23, 25. And that's really all I can give you right now. It's been pretty choppy the last month or so. Platinum here. Let me show you these trend lines. So we're basically kind of in this area. So we have this upsloping trend line, and then this one right here. If this does break, I do think it does. I do think platinum has to go lower. This is where I'd be looking to pick it up. So right around 820, I like this level a lot. If we do get there, I will probably be a buyer myself. Maybe a PPLT. We'll probably look to swing trade that. But yeah, platinum a little bit on the weaker side here. Again, the recession talk hits these metals here. Palladium, the same kind of thing. This may want to go back down to that 1600 handle. And then copper also. So I talked to you guys probably a month or two ago. I said I like copper at about 390, maybe 385. And I was disappointed we never got there. We got that surge, and now we've faded that entire move. So I think we're headed down to that 390, 385 level. So that is where I'm looking for it to go in the short term. Now it is a little oversold here, so it doesn't mean it can't get a bounce first. But that's the level I'm looking for good support there on spot copper. All right, so now crypto. As I'm doing this video, we're flushing out pretty sharply here. So if we flip over to like a 15-minute, see intraday over the last couple hours, we've really, we dumped yesterday, and then we've really started to dump out really over the last hours. Actually, this was actually an hour ago here. I'm looking at a 15-minute. Yeah, so this is a pretty recent here. We dropped right from 20,000 all the way to 18.2, which is where we currently sit, 18,150. And you've got some support here at about 16. We'll call it 16.3, and then if you get through that, you're going down to 12,000. I mean, it's really as simple as that. I didn't think Bitcoin would get here this quickly. I thought we would at least get a bounce first. I liked that little tail candle we put in earlier this week. had heavy volume on it, so maybe there was a good chance that we could push back up into that 20 moving average before rolling over. But Bitcoin's weak here. It seems every day we're getting bad news about this company or that company's going under and getting margin called. It's getting ugly out there. So, overall, I still think it probably holds 16 at first before it gets down to 12. But either way, these are the levels here. It probably gets it will get a massive bounce at 12,000. I might even look to swing trade it myself at that level. But overall, not a good picture. You guys, I've been showing you this for months. Big head and shoulder pattern here. Shoulder, head, shoulder on Bitcoin. Broke that trend line. Bear flagging all the way down. Just nothing good. And that's really it. I said this a while ago, Bitcoin's got to go to 20,000 at least, because we never back tested that on the breakout. And we also never back tested 12,000 either. So really nothing to say it can't go to that area first. All right, guys, I'm going to wrap it up here. And basically, bottom line is, we may be looking down at a little bit more, maybe looking at a little bit more downside here in the near term, but flipping it back over to the spiders. Again, I think we've got some good support down here for a potential summer rally. Is it going to be a major rally? Probably not, but it'll at least be a rally where I think that things quiet down and we don't have these big 2, 3, 4% moves in a single day, every single day, at least for, maybe the remainder of the summer. And then after that, I think we have volatility pick up again in the fall. All right, guys. Anyways, I'm going to wrap it up here. Come find Jason on Patreon. Come find me on carnivoretrades.com, and I will talk to you all next week.